let's talk about investing. So if you're watching this video, you're probably a young investor. And when I say young investor, I don't necessarily mean young in age, I mean young in experience. Because I think in the time that I've been involved with all this investing world, I've realized that a lot of people don't start until they're older. A lot of people actually don't learn about money until they're much older in life and they don't understand how to save and how to invest and how to make your money grow. And I think that's one of my motivations with some of the content I do is to try to get younger people involved with saving their money and setting themselves up for a better future. And if that includes people that are a little bit older and people that were never taught about money and how you can help yourself grow and help your future look better with with the money you're making now, then that's great. So I want to talk about basically what got me into investing. So I'm coming up on my third anniversary of my first stock purchase, which was back in November of 2017. And basically what got me into investing was I was just searching YouTube videos, perhaps like you're doing now, trying to basically find easy ways to make money. And one of the lessons, which isn't the point of this video, is that there's no easy ways to make money that are going to last, at least. So if you're looking for that answer here, you're not going to find it. But I stumbled across some videos on investing, and I believe some of the early videos that I found were basically, the penny stock stuff and how you can make money quickly with investing. And don't get me wrong, it's definitely possible, but as I'll get to a little bit later, it's not the smartest idea, and you're going to end up with a lot of heartache if you go that route. So basically, I'm looking to teach here and talk about my experiences with the long-term investing and basically the buy and hold type of model. So that's the type of investing we're talking about here. So November 2017, I purchased my first stock. It was 3 shares of Payment Data Systems, which is now called Usio, and it costs, I think, cost about $3 a share. It was something that was dumb. I didn't look into it at all, really. I just found it somehow. It was a cheap stock, and I bought it. And I didn't really hold it for too long. I think I held it for about a month, and I sold it for a 74-cent loss. So I was kind of just looking to get rid of it. And not long after that, I also purchased Square and Funko. So Square was kind of just a random one I just found and bought it. And Funko I knew because Funko Pops, I mean, everyone loves those. So I thought it was a good company to invest in. And, this is kind of how investing is early on. You kind of just find stuff maybe find some cheap random stocks that you think may have potential to grow super huge. Most of them don't, but you never know. So that's how it was early on for me. And I started getting some good gains out of these stocks, especially Square. So I started doing more research on stocks. I'm like, how can I make this money grow a little bit? I'm in college and I want to, try and set myself up here. Want to grow my money as quickly as possible. So I started getting into options. And options, let me just say, not a good idea. So if you're looking to invest, you really need to stick with what you know because options got me in a pretty deep hole, at least for my standards. So if you don't know what options are, they're basically bets on a stock. So you have a call option, which is essentially you are predicting that by a certain time, a stock will go up to a certain price. And there's a put option, which is the opposite. You think it's going to go down to a certain price by a certain date. So I'll give an example of, let's just say Microsoft. So it is September 17th. So, and option contracts are called on Fridays. So let's say September 25th, next Friday. Let's say you think Microsoft stock is going to go up to $205. So you're going to purchase this contract, and a contract encompasses 100 shares of Microsoft. So you are not buying 100 shares. You are buying the right to buy 100 shares at the price of $205 by September 25th. So most option contracts aren't executed, which means that you're not going to actually buy those 100 shares. Most of the people get in and just buy and sell the premium. So the premium is the amount of money that you're paying to have the right to buy those shares. And the premium will go up or down depending on whether it's a call or a put, and depending on whether the stock is going up or not. So let's say you buy a call option, $205 for next Friday, and it is a premium of, let's say, $3, because it's not too far below that right now. So $3, and you are multiplying that $3 by the 100 shares. So, or you're multiplying the premium. So in this case, it's $300, or it's $3. So you're paying $300 for this contract. So essentially, for you to break even on this contract, you are going to need the share price to actually be above $208. Most of the time, like I said earlier, people will flip these contracts before execution. So let's say, tomorrow is the 18th. So let's say that Microsoft has a really good day and the premium goes up, and you buy in at $3, and let's say the premium goes up to $3.25. So you would be selling that share, or you would be selling that contract, and you would be making $25 because it's a 25-cent gain multiplied by 100 shares. So that's essentially how options work. And basically, what I did was, I was like, you know what, I'm going to throw my hat in this ring. I'm going to try option contracts. Just do a few here and there. We'll see what happens. So in late August of 2018, I decided, I'm going to start putting some money in here. I put $50 into Logitech. I put 33 into Microsoft, some other stuff. And within 10 days, I had spent $600 on options. And these were all call options, so I was expecting the market to go up for all these stocks. And for me to get this money, I also had to sell some of the shares I already had, so keep that in mind as well. So not long after I bought a lot of these contracts, the market went down. And there wasn't really a great reason for it to go down, at least that I don't remember. But the market was down for about 3 months. So long story short, I put a bunch of money into these contracts, and it was nearly $800 by the end of it. And I didn't lose all of that money, but I did lose about half of it. So I lost over $400 with these options contracts when I could have just stuck to what I known. I could have invested in stocks and just held them. I could have kept the money I had in the stocks and not sold them for the cash. And I probably would have not lost any money at all. And if I did, it would have just been a small amount because the market did go down after all. So there's that. But, it sucked at the time because I was only about a year into my investing career. And, it kind of hurt to lose all that money because, you work a job, you put your money into the stock market, you want it to stay there. But when you're going down the path of options or just in general stuff you don't really understand, like for example, back a couple years ago when Bitcoin was so big, there was people left and right throwing money into Bitcoin. They didn't understand it. They just knew it was going up. And there's a common saying among, smart investors is that when dumb money starts entering stocks, that's when you got to get out. Because, if people are putting their money into something they don't understand, it's just not going to work out. And that was essentially what I was doing to myself. I was making educated guesses on these things, but I didn't understand options too much. I didn't understand how it worked. I just knew that the upside for my return was a lot bigger than stocks. I could have made a lot of money quicker. And on some of the stuff I did, I got some good returns on a couple of the things, but I lost so much on the other stuff that it canceled it all out. And so essentially that is the point, is just stick to what you know, especially early on. because as you get older, you are going to understand how things work. I'm only 3 years into this and I've learned a lot. I've gotten pretty good, I think, at figuring out what stocks work, what industries grow, and where my money is best spent. And, it's only been 3 years, so imagine where I could be in 3 years from now, and 3 years after that, and after that. I mean, if you stay up to date on this stuff, you're going to be learning a lot. And you also see a lot more trends in the market. You're able to spot, you're able to read charts and spot trends and where stuff is looking, whether things are going to go up or down. You're going to understand how the market moves. So, as a new investor, just don't get too upset when bad things happen, because I essentially looked at my losses from options as like a paid lesson. Just like anything, like you pay for school, you pay to read books, you pay for all these education, all these ways of education, and you don't look at it as you don't look at it as lost money because you're getting something out of it. And I kind of looked at it the same way here, because I did lose money, but I was also gaining a lesson from it that I needed to just stick to what I know. And ever since then, I've made a good amount of money in the market. I've, had good returns. I really haven't had any stocks that have done too poorly. So that's basically it. Stick to what you know, and you will find success in the market. And if you look below in the description, I'm going to link an article I wrote about this. And I'm also going to put a Robinhood link in if you do want to sign up for Robinhood, and you can get a free share from that. So any questions, go ahead and put them in the comments, and we can have a discussion about them. And thank you for watching.